My name is Daniel Hill, and I'm the founder and chairman of a property group called PPN UK, one of the UK's leading property groups. I've been investing in property since 2011, been an entrepreneur all of my life, and over the last decade, collected a number of industry awards for the businesses and the achievements that we've made. So hopefully, if you joined us for the first time and you haven't heard of us, hopefully that gives you the confidence that over the next 45 minutes, you're in good company, and I'm going to give you as much value as I can as to how to build your businesses in property. So PPN UK is the property group that we've built since 2011, and we have a head office up in Nottingham. We have local offices all the way around the UK, as far north as Ellesmere Port, Manchester area, as far south as Bedford and London. And we operate in lots of different sectors, so we've seen lots of different parts of the industry, capitalise in lots of different markets. And what we do really is we spot niche opportunities. So we look at the market, we look at the economics, we identify the niche or the crest of the wave that we want to capitalise on, and then we start a business and we rapidly scale it within that space. We did that very aggressively from 2011 onwards, really. Obviously, the last bust was 2007, 2008. We waited for the market to flatten out, and then we moved into property. We had some other companies outside of property. We've started over 20 companies to date. Got into property in 2011 when the market started to flatten out, and then we really rode that next wave as the market recovered, and we capitalised on all the opportunities that happened then. Many of you have been in property for a longer period than that, and many of you will have experienced how markets can boom, how markets can bust, and how all markets, economics, booms and busts, all markets and economics have boom and bust cycles. Without a doubt, heading into 2020 to 2025 is going to be the best time in history to be a property entrepreneur. The microeconomics, the macroeconomics, the property sector specifically, all of the market conditions are absolutely perfect. And not only is it going to be the best 5 years in history, it's probably going to be the best time for another generation, because the other side of 2025, the market will start to recover, it will regain stability, and there'll be mass confidence, which will drive other people into the market, increase competition levels, and start to concentrate the margins we're able to make. One thing you realise in business and in property is, whilst success and failure are very, very predictable, timing is absolutely everything. So there's times where you can make things very difficult for yourself. There's times when there's going to be high competition. There's times when there's going to be small margins, and there's times when there's going to be barriers to entry. Equally, there's going to be opportunities where you can see a gold rush. Positions in the market where opportunities are high, competitions are low, margins are very, very lucrative, access to the resources that are required to capitalise are very readily available. And this is without a doubt the amazing opportunity that we've got coming up for us in 2020 to 25. What I'm going to share with you on this webinar, which is the Gold Rush Report, which is the first time I've ever shared this, is the macroeconomics of how this is all going to play out. It's undisputed, it's unquestionable, it's basic economics all coming together to identify how the niche and the market works. The majority of people in the mass market, you can be rest assured, aren't aware of this timing. They will be reading the headlines of the papers, they will be following the mass market, and they will be trusting what the government are saying and what's publicly available in the news and otherwise. All of these conditions need to be considered. All of this news needs to be taken on board. However, those that are in the know and understand how this all comes together will see very, very quickly that this isn't a time to be afraid. This isn't a time to be reserved. This isn't a time to sit on the sidelines and wait for the seas to steady. This is without a doubt where we're going to make it. 2020 to 25 is going to be the next gold rush. It's going to be the best time in the next 20 years, if not a generation, or to be a property entrepreneur and to capitalise, and it's going to be where all of the opportunity is. The other side of that, mass market confidence will return, and it'll be a very competitive space again. So what I'm going to do is I'm going to take you through the macroeconomics. I'm going to show you how there's only two factors that we need as property entrepreneurs to have the best economical landscape to go out and capitalise. And they are high volatility and they are high volume. And I'm going to show you how this all comes together. So in the economic, if we're looking at positioning and we're looking at timing and we're looking at the property market and we're looking at the economies and we're looking at pulling all of this together, there's only two things you need for property entrepreneurship to be lucrative. For you to be in the best position, for the best timing ever for property entrepreneurship to work, there needs to be two factors. So we've got high volume, which means lots of activity, lots of high value transactions, lots of things going on. And then you've got low volume, low activity, low access to stock, low resources, not a huge amount happening. And then we've got low volatility, which means the market's very steady, it's very calm. It means that there's predictability and confidence in the market. And then high volatility, which is uncertainty, fluctuating markets, booms and busts, highly cyclical economic landscape, lots of quick shifts and changes within a short succession. And the space that we want to be in is high volume and high volatility. And these times genuinely don't come around very, very often. So there's four waves that you'll see through a cycle. So through various different cycles, various economic cycles, different people can dominate in different spaces. If we start off by looking at low volatility, so low volatility means it's steady, there's not a lot of change, it's very predictable. And high volume, which means there's lots of transactions going on, there's lots of activity, there's lots of growth. So lots of activity, lots of volume, and low volatility. This space is where we get mass market confidence because the C's are steady and there's a high volume of transactions. The people that capitalise in this area, the people that make it big during this time, and the people that operate in this space are your residential buyers. When the market's stable, it's secure, there's finance available, there's lots of transactions, there's help to buy, there's initiatives, there's stable, if not growing property prices. This mass market confidence is where the residential buyers operate and execute, and that's their time to own it. If we were trying to compete here as property entrepreneurs, what we would find, because we're competing with non-commercial sectors, so people who are buying for consumer rather than retail, if you like, so people who want to live in their houses, is the margins get compressed, the demand pushes out supply, it's high competition, low margin. And this is where this is caused by mass market confidence. This is where the residential buyers come out to play. If we go down and we say, right, so low volatility, which means high confidence, steady market, everybody knows where they stand. Low volatility, but a low volume, so steady C's, but a low level of transactions. What we see economically in this space is a mass shortage. So low volatility breeds high confidence, breeds a clear, predictable landscape, but the low volume of transactions means that people the people who can afford to make the least money will float to the top because there's not many transactions going on, the margins get compressed, and the supply is reduced. You know, demand's quite high, but supply is reduced. When you have a mass shortage in a market with a very stable economic framework and economic landscape, really, and a limited, volume of stock, this is what's called a mass shortage. There's not enough stock. There's good, stable demand. Everyone knows where they stand. And what happens here is, due to the high levels of competition and the low margins, it's basically the rich and the REITs that come out and operate here. So the rich are looking for the rich's primary objective, those who've already made their money. This will be those who capitalise now, the other side of the gold rush. They've made their money, they've got the capital. All they're looking for is secure capital, sustainable returns. And the market they operate in is low volatility, low volume, moderate margins. The same for REITs. So REITs are your real estate investment trusts. So they're looking for, depending which sector, 4 to 6, 7% year on year rental income, sustainable money, all of these sort of things sort of coming through. And you get those in markets of low volatility and low volume. We don't want to compete in this space because there's no margins, there's high competition, It's dominated by the people who can afford to park their funds and are looking for moderate returns. It's definitely not the most lucrative period to be in. The next sector is one of high volatility and low volume. So when you have high volatility, which is high uncertainty, lots of change in the market, lack of predictability, lots of change, lots of sort of fear factor coming out in the market. So high volatility and change in the market, but low volume. So it means everybody, there's uncertainty, there's scared, the market is scared, but there's a low volume of transactions. So people are scared, so there's nothing driving it by appeal. And there's a low volume of transactions because there's no access to stock, or there's a high shortage of supply. The market isn't moving. It starts to slow, if not grind to a halt. This space here is where we experience a mass inactivity in the market. So when you have mass inactivity in the market, things just slow down and stop. And in the housing sector, where you've got growing population, growing private rented sector, demand for rented accommodation. When you end up in a period of high volatility, which is scaring the masses off, and low volume, which means there isn't a suitable amount of stock, there isn't a suitable amount of activity, there isn't a suitable amount of transactions, what happens here is the public sector get involved. And the public sector, whether that's housing associations or local governments, national governments, whoever's in power at the time, what's required here is stimulation to the market. There has to be some incentive, there has to be some initiative, there has to be some public sector drive to really fire up the economy again, to fire up the activity. And this is where we start to see funding being made available and Help to Buy, reduced planning restrictions, releasing green belt land, anything they can, investing in infrastructure, investing in public housing. If there's high volatility and a low volume of transactions, it's the government and the public sector that have to lead the way. They have to fire up the economy, they have to fire up this sector, and we rely on them to put initiatives in place to start to get these things going again. And then finally is once every sort of 20 to 50 years, we end up in this phenomenal opportunity, this phenomenal position, and this will be the best time in history to be a property entrepreneur, because both of these come together. For the first time in a very long time, we've got the opportunity to have high volume in the market and high volatility. What this creates in the market is high uncertainty. So mass uncertainty in the market, mass confusion, mass concern, mass fear of recession, mass panic, mass withdrawal, mass standing on the sidelines, mass uncertainty where most people don't know what's going to happen. So they hedge their bets, they sit on the fence, they withdraw from the market, and they have to wait until the market steadies, because the high volatility is going to create mass uncertainty and causes the mass markets to actually withdraw from the market. This enables us to have low barriers to entry, low competition. Because of the high volume of transactions, it creates opportunity. It introduces high margins. It introduces high opportunity for growth. And this mass uncertainty in any market, niche, crest of the wave, mass uncertainty is where entrepreneurs operate. And with high volatility in the market and high volume available in the market, this is without a doubt where property entrepreneurs come into their own. This is where we own the space. It's where we can capitalize. And those who make it now in the next 5 years will be the ones who make it big. So there's 4 different market conditions we'll experience over the cycle of time. The one that we're moving into now, literally on a daily basis. And when I say don't be the one to miss the boat, I mean, if you're not already active in this space, you're already behind the times. Like those who are active now and starting now will be the ones that absolutely dominate over the next 5 years. And you'll make your money now, you'll batten down the hatches, and then you'll let it ride out with the market. As the confidence comes back in the market, the volatility reduces, the residential buyers come back in, that'll drive the market back up, property prices will increase, competition in the market will increase, developers will come out and start building stock again, and then slowly the market will settle, it'll get predictability, the volume of stock and the volatility will reduce, residential buyers will come in, then back round to the rich and the REITs. And then should we experience any further volatility in the market, probably with the next wave of recession in 20, 25 years, We'll see. We'll see. Absolutely nobody can predict that. It might be 2 months. It might be, well, I would be highly surprised if we don't see stagnation, if not some market conditions of recession over the next 2 to 5 years as we go through the market changes I'm going to share with you. But should we go back into that space where the volume of transactions reduces, that's when the public sector steps back in, fires things up, and then we go around again. The most important thing for you to realise is we need 2 things as property entrepreneurs: high volume and high volatility. And this is the best time in history because from 2020 to 2025, we've got both of these things in our market. It's not a surprise that obviously we've been sharing this on Property Entrepreneur. You're not the only people that are tuning into tonight's webinar. We had a 30% higher registration rate than we were expecting for tonight's webinar, and this isn't a coincidence. The gold rush is drawing a lot of attention. We've been training property entrepreneurs on this for 6 years, and without a doubt, this space of people wanting to become property entrepreneurs, wanting to move into the space, wanting to capitalise on this opportunity has been reasonably consistent across the market. The last program that we did to show, you don't need to worry tonight, there's no sales pitch. One of the things you'll realise about missing the boat is every single one of our programs for the rest of the year now is sold out. The only one that isn't sold out doesn't open until the enrollment doesn't open until the 5th of September. So there's no sales pitch tonight. There's nothing you can sign up for. All of the events for the rest of the year are unfortunately sold out. The last one we did, based on the up-to-date content, the methodology that we use, the case studies we've achieved, and the training that we delivered to our delegates, was voted 9.9 out of 10 for a 3-day program that's cost £2,997. Across all delegates, every single question, they voted us 9.9 out of 10. The demand for this space is very, very high. It's not a coincidence that the last flash sale we did sold out in 4 minutes. Our last accelerator of the year, our last 3-day property entrepreneur program at the Belfry in Birmingham is, I think it's next Thursday, Friday, Saturday. We completely sold out. We sold every room available in the Belfry. We then bought all the we sold out. We then bought all the available rooms and sold those out. We then bought all of the available rooms in the Lee Marston Hotel down the road and sold all of those out. For this event, we're actually shipping people in via minibus from another hotel to attend this 3-day event because we couldn't get enough bedrooms at the venue. 2020 to 2025 is the gold rush for property entrepreneurs. Everybody wants to get in this space. Everybody wants to get involved. Nobody wants to miss it, including myself. And property entrepreneurship, without a doubt, is taking its next drive into 2025. This is our next event. So this starts in October. This is our 12-month training program. We've been running it for 6 years. We've delivered some of the UK's market leaders, award winners. You'll know many of the people that we've trained around the UK. This program starts in October, and you can enroll from this from September. But like I say, there's no sales pitch for that this evening. All the events that are currently available have already sold out. What you're more interested in tonight is the gold rush. This is the gold rush report. What does this actually mean economically? What backs up these fundamentals? It's all well and good. We've built our businesses. We've got a good track record. We've capitalized on these waves. We've scaled these companies. But economically, how do we actually substantiate the fact that this is going to be a gold rush? The fact that 2020 to 25 is actually going to be the best time in history, and the fact that economically we do actually have high volume and high volatility at the same time. Because if we get this mass uncertainty, this is where property entrepreneurs come out to play. No other space, no other sector will be interested in this market. This is our 3 to 5 year period to absolutely capitalize. But how do we actually know that this is the space that we're in? So let's start off with high volatility. So we need high volatility in the market so the masses back off. If everybody else is scared, there's lots of change, there's lots of shifts, the government won't get involved, the funds won't get involved, the big developers, the PLCs, all the people who are risk averse, looking for secure capital, sustainable margins, they'll be playing the long game. They don't want to play in this short-term area of high risk. How do we know that there's high risk? How do we know that there's high volatility? And how do we know that this is actually the time for entrepreneurs to move in? Well, this is a unique time in history because we have several factors, both in the worldwide economics, in the macroeconomics, and in the industry specifics that are playing into our favour. So the first, obviously, Brexit. One of the biggest economic shifts the country has seen ever. We're going to leave the European Union. Not only that, it's 31st of October we leave. We're recording this video at the end of September. So we're like 4 or 5 weeks away from Brexit, and nobody knows if we're going to have a hard exit. Nobody knows if we're going to have a deal. Nobody knows economically what it means. If you were looking for a period of high uncertainty, lack of confidence, and high volatility, this is where people run for the hills, because Brexit is scaring the living daylights out of everybody. We've got tax changes. You look in our sector, some of the tax changes that have been taking place in the property market, they're absolutely crippling. There's a lot of volatility in the market because of significant tax changes that are crippling buy-to-let portfolios. They're fundamentally changing the way that property businesses can operate, and they're causing landlords, investors to leave the market, and not only leave the market and dump stock, but also refrain from coming into the market, because you've got increased costs, increased stamp duty. You've got different models where we have to use SPVs and limited companies now to get around the tax changes. All of these things create huge volatility in the market because of the significant changes. This is the first time we've seen this in the buy-to-let market since when did buy-to-let come around? Like 95? You know, we've got over a decade of boom. So if you say 2000 and I'd have to get the actual dates out for the buy-to-let curve. But these tax changes have never existed to put any pressure on the landlord. Ever since buy-to-let mortgages came out, we've ridden that wave, it's driven the boom, it's created this buy-to-let culture which didn't previously exist. And for the first time in history, the government have put the anchors on. They've put the barriers to entry up, and they're stopping people from entering the market with increased taxation, and they're forcing the cottage industry out of the market by making the businesses fundamentally impossible to run, by basically, in a crude sense, taxing revenue rather than profit. It's draconian, it's verging on illegal. Like, you couldn't do that in any other sector. These tax changes create huge volatility. We've got a change in Prime Minister. Any change creates uncertainty. A change in Prime Minister mid-government is a significant trigger point to cause a lack of confidence in the market. High volatility, change. What are we going to expect? How is he going to play it? Many sectors are experiencing higher regulation and legislation, whether that's landlords, whether that's your HMOs, whether it's your service accommodation, whether it's your building control, whether it's your lettings industry, whether it's the lettings sector as a whole, whether it's lettings agencies and fees. All of this increase in regulation and legislation is creating huge volatility in the market, because people have got to change. They've got to change their pricing. They've got to shift. Some of them have got to leave the business. All of this volatility starts to raise alarm of recession. Now, as soon as you put recession on the headlines, on the news, on the radio, it creates mass uncertainty. It creates high volatility. It scares the living daylights out of people. And one of the things we look at here, so this is basically, if you're into economics and you understand reflexivity. So reflexivity was coined really by George Soros, the guy who broke the Bank of England, which says the economy doesn't really react to true economic fundamentals or commercial fundamentals and economic markets. It reacts to what's on the front page of the paper and how confident people are spending their money. As soon as you say alarm of recession on the headlines, everyone battens down the hatches. You know, nobody's refinancing their homes, selling their homes, buying investments. They're all battening down the hatches and waiting on the government, waiting on the newspapers, waiting on the headlines to change. The alarm of recession creates mass panic, mass volatility, and mass uncertainty in the market. The good thing for you and I is that we understand, when you understand basic economics, the definition of a recession is 2 quarters, so 6 months, with a reducing GDP. Quarter 2, we saw the first reduction in GDP since 2012, which sounds horrendous. It sounds crippling. You know, oh my God, we're going back to a recession. But what they don't tell you about that is the reason that is, when you look at the economics, is the UK as a GDP stockpiled £10 billion worth of stock in quarter 1 because we were due to leave for Brexit. we didn't leave Brexit. So everyone's burning through their reserves, burning through their stock, burning through the £10 billion spike in stockpiling, and we're working through that. So it's not actually a reduction in GDP. It was an artificial spike, and quarter two was a correction. Going into quarter three, it's quite possible we'll see another spike because we're going to exit Brexit again. You know, has there been another spike in quarter two? Have we artificially spiked reserves again? You know, all of this stuff you need to understand, but the mass market won't have access to this information, or at least at the highest level of the headlines, that's not what they'll be hearing. Alarm of recession creates high volatility. Changing government. So the next government election is 2020. There's no way, whether it's a good exit, a bad exit, a hard Brexit, we go out smooth, we go out all guns blazing, whatever. There's no way we're going to have smooth sea before 2022. And that's when the next change in the government is, if we don't have one sooner. Elections, changing government, all of these things create a volatile market with mass uncertainty. These are the things we're looking for as entrepreneurs to create the opportunity for us to come in and ride the next wave, have the next gold rush, have the best time in history. And then fluctuating property prices. Obviously, we've seen property prices gradually grow and boom since about 2012 in different areas around the UK. In London, we're starting to see those drop off now, and around the rest of the UK, in the main, they're sort of stagnating. This high volatility through Brexit, changing government, recession, all of this is going to have a negative impact on property price growth at the macroeconomic level. This is another opportunity that creates high volatility for us. Someone said to me the other day, well, if property prices go down, why would you want to buy more? You're just going to lose money. This is pound cost averaging. If my property portfolio goes down in value, I'm playing the long game. I want to ride this wave. I will go out and buy more property as it gets cheaper, because the macroeconomics of the property cycle for the whole of history in the world is that property prices go up over time, even if it's only at the rate of inflation. As long as you're playing the long game and you're not going to get caught in a short-term trading gap, fluctuating property prices, without a doubt, is a way that creates high volatility in the market. So these are some of the things that are causing high volatility, and then we need the market to see this. We need people to actually understand this. So here you go. This is a report that came out this year, 2019 to 2020. This is the new tax year. This is less than 2 months old. There's already 4 tax changes. Tenant fee ban, which will cripple many areas of the letting industry. 3 new landlord regulation changes already scheduled for 2019. Discrimination against housing benefits is set to be banned. So as a private sector landlord, you might have to take housing benefit tenants. Maybe they will do it, maybe they won't do it. What this does is creates volatility, it creates uncertainty, it starts to push more people out of the market. And then obviously we've got landlord insurance, we've got changing regulations for letting agencies, we've got client account management coming in by the banks, which is introduced by central government about money laundering. All of these changes are coming in that are going to create uncertainty and volatility in the market. Landlords, let me just close my panel down. Landlords leaving the market in droves, with exodus intensifying in the capital. This is only a few months ago. People in the capital are struggling with transaction levels. Property prices are dropping. Transaction levels are dropping. Landlords are leaving the market around the country due to tax changes, due to increased increased taxation, due to the changes in stamp duty, due to the shifts in the letting sector, whether that be increased regulations mean they have to bring the properties up to standard, or increased costs from their letting agents for those who are armchair investors and can't afford to absorb the increase in costs. A political uncertainty. This was July the 23rd, less than a month ago. Political uncertainty with Boris coming into power. 153 estate agents go bust and 7,000 jobs at risk, say insolvency firm, based on the tenants' tax change, the landlords leaving the market, increased costs in running agencies. All of these things have an effect on the industry, and all of these things create increased volatility. Countrywide, which is like the corporate Goliath. In fact, look, there's a little snapshot there. I didn't even see that. FTSE 100. This was taken 7th of March. FTSE 100 down 12 points. Everything is heading in the wrong direction for the mass market confidence. It's heading in the right direction for property entrepreneurs to come in understand the market, position themselves effectively, and absolutely clean up. Estate agency group Countrywide, if you've been checking this in the papers, I've posted on it in recent weeks on my Facebook page. Countrywide slumped £280 million loss, and this was before the tenant fee ban took root. This was before they lost all that revenue from tenant fees. These corporate Goliaths with national branches, overheads, local offices, national networks. This group is absolutely, if you look at the share price over the last 2 years, it's absolutely bottoming out. All of these factors are creating huge issues in our market, in our sector. This is where the opportunities exist. Slowing economy, risk of losing jobs. This is the transactions. If you compare last month, July 2019, against last month, July 2018, transactions levels are dropping. Despite there being the cheapest finance ever available, access to mortgages, no issues in the liquidity and the volume sector, transaction levels are dropping due to high volatility, not high volume. July 2019 significantly down on July 2018, which was growing year on year over the previous years. London house prices fall at the fastest rate in 10 years. Everything starts in the capital and works its way up. UK house prices suffer surprise July fall as the housing market treads water. This is what we're looking for. People starting to sit on the sidelines. People starting to sit on the fence. People to stand back and wait till the risk levels reduce. This is our time. This is our space as property entrepreneurs to move into the space and start to make activity. Recession fears grow as UK economy shrinks on back of Brexit chaos. We're going to have Brexit chaos for months, if not years, as we ride out this curve. This is the time to be moving in as the masses start to get scared, mass uncertainty in the market. This is where property entrepreneurs come out to play. So there's high volatility in the market. We've established that. That's one of the things we need as property entrepreneurs. We need everybody else to be scared. We need property prices to reduce. We need margins to increase. We need a high volume of stock and activity available to capitalise. And because of the mass uncertainty in the market, this is where property entrepreneurs operate. So high volatility is all well and good. However, if there's a low volume of transaction, if the whole thing seizes up, if the whole thing locks gears and nobody does anything, it's over to the public sector. The second thing we need to make sure that we have in order for property entrepreneurs to be able to capitalise is high volume. So we've got the best volatility that we've had in the last 10 years. Well, in the last probably 10 years. In fact, we've probably got more. You could argue that we've got more volatility than we had in the last 20, 30 years, because the volatility and the size of the shifts that we're experiencing locally, nationally, economically, and globally through Brexit, recession, tax changes, all of these things is arguably more significant than when we had high volatility and low volume, because the whole thing seized up with the GFC. Nobody did anything. That was a proper recession. I mean, that was like, it was a global financial crisis. The GFC, it was quite significant. The second thing we need to establish is, do we have high volume? If we've got high volatility, mass uncertainty, mass opportunity, do we actually have high volume in the market? Well, let's have a look. What things do we have to give us the high volume that we need to have the next gold rush in 2020 to 2025 that would actually make this the best time in history, because we have high volume and high volatility? What things are coming into play to make this the best time in history? Well, the first one we're talking about property is a quick point. This is that property is a high volume asset class. Even if you're only making 10, 15, 20%, when you're making 10, 20, 50% selling toilet roll, you have to sell a lot of that to make money. The good thing about property is you've got a high volume of capital exchange in hand. So if you make 10, 15, 20% in a period of uncertainty, or 10, 15, 20% in a period of recession, because you're doing that on 100,000, 500,000, £1 million property, the relative margin at the bottom end, 10% of £100,000 is £10,000. It's far more significant because you're trading high volume of capital. It's a high volume asset class, period, which just sets the foundation for this being a fantastic place to operate. The next, you've got landlords leaving the market. Landlords have been hammering the property market ever since buy-to-let curve came in 1995. 1995, buy-to-let mortgages came in. Everybody rode the wave. It became the next big thing. Every man and his dog were buying property, and that was the biggest wave to happen. For the first time since buy-to-let has been around, landlords are not only leaving the market, so they are physically leaving the market now because of the tax changes that are forcing them to sell up. They're also not entering the market because the higher barriers to entry, the higher stamp duties, the lower capital growth, the lower yielding properties in many areas. Landlords are leaving the market and many of them are not coming back. This creates a high volume of opportunity for those that want to observe the masses, do the opposite, and the property entrepreneurs that move into this space to make the most of high volume. The baby boomers. Now this is the first time in 100 years where you're going to see this, and you won't see it again. So the baby boomers have started to turn 70. They've bought a lot of property. They own a lot of property unencumbered. They have a lot of the equity and wealth of our country in their own properties and in their buy-to-let properties that they bought during the boom, into their pension funds and into their estate. The baby boomers are starting to turn 70 and they'll need to start downsizing. The cost of care is expensive. Whatever happens during this next curve of the wave, as baby boomers move into their 70s and 80s, is they will need to release supply. Property stock will need to go to the market. This is a very, very unique period in time as these people start to release the capital into the market, release the equity, release the assets, and it increases supply and gives us higher volume. Not only are they increasing the supply, making more stock available, the next wave, the next curve, which is your millennials, have a reducing level of demand. So where the baby boomers were buying their own properties, they were paying off their mortgages, they were stockpiling cash, they were buying buy-to-lets with no mortgages. The millennials have got a completely different appetite. They're not interested in buying. They're not the next wave of home ownership. Home ownership for the millennials has reduced significantly, which increases supply from the baby boomers and reduces demand from the next incoming wave. This continues to increase volume of stock in a period where there's high volatility, high mass uncertainty. Opportunity for property entrepreneurs to move in. Is there stock available? Absolutely. Every single element you look at, there's increasing stock available. The residential market, because of the volatility, because of the lack of confidence, because of the mass uncertainty in the market, people are stopping buying properties. The residential transaction levels are starting to reduce. People don't go out and buy new homes during Brexit. They don't go and gear up and buy the next house while they're waiting for an election. They don't do it in a period of recession. All of this change reduces the residential appetite and market, which reduces the transactional values, and it also simultaneously increases the demand for the private rented sector. The mass uncertainty, the recession, the boom, the Brexit, the international trade, the reducing strength of the pound, all of this slows construction levels where the big corporates, the PLCs, the developers with large supply chains and pipelines. Construction levels have started to reduce. People are building less houses. Supply to the market is going to, new supply to the market is going to continue to reduce. So the volume of opportunity for us to buy stock and then reposition it within the market that's growing, whether that be the PRS, whether that be the millennials, whichever space we decide to go into, there'll be a lower level of competition from the big developers who drive down the margins, drive up the competition. That'll increase a higher volume of transactions available for us as property entrepreneurs as the big boys start to sit on the fence. They start to wind back and they start to wait for the waters to steady. And then if economically this could not get better enough, we've got a booming private rented sector. So you've got huge volatility in the market. Everyone's scared livid. You've got an increasing volume of stock that's becoming available by both increasing supply and reducing demand in the mass market. Simultaneous to that, you've got a booming private rented sector. People need to rent houses. Rents are increasing. The PRS is going to continue to grow. Economically, this is the best time in history to understand the market, position yourself effectively, and go into this space as a trade-in and a professional property entrepreneur. So let's have a look. Again, is this actually right? Well, here you go. Here's the transaction levels over the last couple of decades for people buying houses. Our market that's coming in, so the market that's leaving, is going to be the over 65s who've traditionally owned their own home for the last 30, 40, 50, 80 years. If we look at, so they're going to be leaving the markets because the baby boomers are going to have started turning 70. They're going to need to downsize. They're going to need to liquidate their assets. They're going to look at pension provisions and how to manage their inheritance, things like that. Simultaneous to a reducing demand in millennials who actually want to buy houses, 25 to 34-year-olds. Look at that as a percentage of people who want to own their own home. It's economically, it's very, very clear what's going to happen. Millennials don't want to own their homes. They want access over ownership. That's why they like using Ubers, not buying cars. That's why they like Airbnb over hotels. That's why they like to rent mobile phone contracts rather than buy handsets. That's why they like to rent property and go on holiday rather than buy their own house and cripple themselves with overheads. That's why they like to change jobs every 12 to 18 months rather than stay in a career for the next 20 to 30 years. That's why they like to have multiple jobs. That's why they like to work overseas. Millennials are all about access over ownership. These guys are not coming to capitalise on that next wave, and that's going to drive the volume of transactions we can do in the private rented sector by buying more property that's available due to a reducing demand and reposition it for the private rented sector, which is going to be an absolutely booming sector. Accidental landlords, this was April 24th, 2019. Accidental landlords have less than a year to sell up before facing new tax bills. When I say don't be the one that misses the boat on the gold rush, this is absolute, economically, this shows you this is happening now. This is happening today. Before this webinar, I'm speaking to our team about we need to be buying as much stock as we can. We've got spreadsheets full of deals that we're appraising. The mass market are moving out of the way. The landlords are starting to exit. We're getting ready to gear up, capitalise on this opportunity because these guys have less than a year before they're really going to see the pinch of this tax bill that's been coming in for the last few years. Cheer up, millennials. It'll become easier to buy a house. They can start to buy houses because stock will become available that they don't even want to buy. The snag is because your parents are going to die. The aging generation are going to take over the top of the curve, release the stock into the market to a market of millennials who do not want to buy these properties. Some of the baby boomer stuff's too big, granted. That increases stock to the market. Some of it is perfectly suitable. They just don't want to move into that space. Property transactions drop into a decade low, reducing transaction levels. Investors are starting to sit tight. International buyers are starting to sit tight. Residential buyers are starting to sit tight. Brexit's causing uncertainty. UK construction industry, this is the 2nd of July. This is about 6 weeks ago. Suffers the worst month in a decade. Look for these early signs of the gold rush coming. Look for these early signs of high volatility. Look for these early signs of high volume coming in the market. This is the time for us to be moving in. You do not want to be waiting any longer than you have to get into this space, because miss the boat now and you'll miss it for a generation. Genuinely, those who make it in the next 5 years are going to make it absolutely big. After the 5 years, the confidence will be back, the margins will be gone, and there'll be mass competition. The UK private rented sector is set to dominate by 2025. The gold rush, 2020 to 2025. Investment in the UK's private rented sector will soar to 75 billion by 2025, with an additional 560,000 households expected to be in private rented accommodation within the next 3 years. The government's target is to build 150,000 homes a year. They're not even anywhere near that. The private rented sector is already booming. Rents are increasing on a macro level around the UK. If you know where you're operating, we're not seeing 3 to 5% rent increases. You're genuinely seeing 10, 15, 20, 25% price increases if you know where to position your stock effectively. You pour another 560,000 households moving into the private rented accommodation in 3 years. This is like absolute boom times. This is volume. This is the high volume of transactions that we're talking about looking for. Economically, ladies and gents, it is absolutely unquestionable. We are moving into the time for property entrepreneurs. For property entrepreneurs, you need to have mass uncertainty in the market. You need to have high volatility. You need to have a high volume of opportunity in transactions. And this is the space where property entrepreneurs appraise the risk, move into the sector, and then absolutely capitalise for a period of 3 to 5 years. And this is 2020 to 25 without a doubt. Not only this, if that wasn't enough, which it absolutely is, if that hasn't already sold you that you need to be moving into this space tomorrow, the icing on the cake, the cherry on the top, is that we've also got highly entrepreneurial market conditions. Now I'm going to rattle through this. This is what we teach on Property Entrepreneur. This is how you actually capitalise. But not only is the market absolutely perfect for property entrepreneurs to move into, we've already got government initiatives. We've already got market sector conditions. We've already got one of the best periods in history to be an entrepreneur. You couple that with the property market, and this is an absolute no-brainer to be moving into this space. Record low interest rates. These are set to continue. Access to private and mass market finance, absolutely everywhere, whether it's peer-to-peer crowdfunding, buy-to-let mortgage, commercial finance, government initiatives. There's endless opportunities for private and mass market finance. You have the ability to scale more efficiently and more effectively than ever. On Property Entrepreneur, in the UK, if you're doing 20 to 25%, 20 to 20% growth, that's rapid growth and aggressive growth in the UK. Our property entrepreneurs are consistently achieving 30, 50, many over 100% growth year on year, because the ability to scale efficiently, effectively has never been better. In property, we've got favourable planning conditions. We've got permitted development. We've got minimum space standards, build to rent, high density developments. All of these things play into your favour to absolutely cash in and ride this wave. We've got a globally skilled and flexible labour workforce. Granted, in the UK, unemployment is lowest rate. So employment rates are their highest in 40 years. Salaries are the highest they've been in a decade, but globally skilled and locally sourced or domestically sourced flexible labour force is the best it's ever been, without a doubt. You can work with people the other side of the world on, relatively ridiculously low salaries for on WhatsApp or Slack, and they're available to work efficiently, effectively in your business. In the UK, we've got flexible labour forces. You don't have to cripple your business with 30, 40 grand salaries nowadays. You can use performance related pay, fixed price contracts, all of these things. And there's government initiatives left, right and centre for startups and entrepreneurs. These are the things that we train our property entrepreneurs on. And we use our blueprint is unique and proven. We've built market leaders, we've built PPN UK, we've won multiple awards in the space. We do this year in, year out, and it's absolutely flawless. You've also got the opportunity to use this unique and proven blueprint. The next enrollment starts in October. The next program starts in October. You can't even sign up yet. We don't open the doors until the 5th of September. But this unique and proven blueprint for the 60 people who join us this year will enable you to capitalise on this without a doubt. It's unique, it's proven, it's flawless. The danger isn't do you know what to do? The danger is, do you have the ability to execute? And that is going to be your risk as to whether you miss the boat or not through this next gold rush. The FTSE's down. Look at where we're going. Like other finance markets, macroeconomics, Funding Circle have added £4 billion to GDP. You can get rates from 1.9% per year, 500k unsecured loans. Honestly, these are absolutely mental times. I guarantee you, in the next 5 years, we will look back on crowdfunding and unregulated peer-to-peer lending like we do now, the 125% mortgage. In 5 years' time, we'll look back on it like that, and it'll be sad for the people who've lost money. For you, the ones that we're going to train effectively, the ones who know how to actually execute on this, and the ones who know how to get this into your business, this is the time for you to absolutely make the most of it and capitalise. Record low interest rates. Not only are we going into a boom time for property entrepreneurs, these record low interest rates and cheap finance are not only here to stay, they might even sink lower, according to economists. Government-backed schemes and initiatives. If you look at the new initiatives that are available for property entrepreneurs to use, they are secure, they are consistent, and they are increasing in some spaces. There's many of them available. These tax reliefs will give you absolutely game-changing results. 98% of the UK economy is made up of the private sector is made up from small businesses. There's no way the government cannot support you through this gold rush. They need to be behind us. They need to be supporting us, because it's us that will keep this sector going. It's us that will maintain the property market, and it's us that will drive the sector through the next 3 to 5 years as the government balances it out, the economy settles down, and the mass market start to get confidence, and then the corporates, the funds, the pension funds will all be back to play the game when it's safe and clear sailing. But by then we'd have made our money, we'd have battened down our hatches, and we can just ride the boom for another 5 or 10 years while everyone else plays the mass market game of low margins. Guys, without doubt, 2020 to 2025 is the next gold rush. It's going to be the best time in history, and there's a very, very narrow window of opportunity for you to make the most of this while we have high volume, high volatility, and mass uncertainty in the market. What are we doing? We're doing exactly this. So PPN UK, many of you have been following us for years. Many of you have worked with many of our companies. We've got lots of companies within the group. We've started over 20 different companies to date. PPN UK has about 16, I think, companies under that group at the moment. And we're gearing up and scaling very aggressively because the market has never been better. The margins have never been more lucrative and the opportunity has never been better. If you watch what we do over the next 3 to 5 years, we are absolutely cleaning up. If you watch what we do from 5 years, 2025 to 2040, we'll probably be battening down the hatches and riding for the long returns, having already capitalised on the high margins and capital gains. Multilet UK, this is the UK market leader for professional house share management. We own the largest network of HMO letting agencies in the country. We're currently acquiring, in this time of uncertainty, this time of mass uncertainty, risk, lack of market confidence, we're buying more businesses than we've ever bought. We've bought 3 companies already this year, and I think we'll probably buy another one within the next quarter. We're scaling that aggressively because we know how to. PPN Portfolio Builder, this was up until recently the UK's most oversubscribed multi-let sourcing and development company. We source high cash flow portfolios for high net worth individuals. We have a £10 million paid waiting list that pay £1,000 to join the waiting list. And to be honest, we haven't even opened our waiting list in 2 years because we can't keep up with the demand for these products. Our minimum fee is £15,000. The last fee we charged to source a deal for someone was £48,000. If you know how to operate in this market, you know where the opportunities are and you start packaging them up for other people, it can be very, very lucrative indeed. These are a few of the deals that we sourced in the first quarter. HMOs, houses to HMOs, 3 beds to 6 beds, all en suites, conversions, extensions. These are the sort of deals that we're doing in that space. Property Entrepreneur, it is not a surprise that we've expanded Property Entrepreneur every year for the last 3 years, and every year it's sold out and been oversubscribed. We can't keep up with demand of people who want to become property entrepreneurs. They want to build these portfolios. They want to ride this wave of opportunity. The fact we've now got the gold rush is just blowing things out of the water. This is without a doubt the home of high performance. Success and failure are very predictable. We give you the blueprint. We show you how to do this start to finish. It's no surprise that it's been in ridiculous demand for the last year or so. Every single program that we've got this year has already sold out. The board at £20,000 ahead sold out. The advanced program sold out. The only program that's available for you to now join is the foundation program, but you can't even sign up for that yet. Enrollment opens on the 5th of September. Manor House Developments are high density, build to rent, private rented sector construction company. This is a £20 million joint venture between me and one of my business partners, and we are absolutely flying with this company. So this company has been built to ride the next wave, to capitalise on the gold rush, to seize these high-risk opportunities or medium to high-risk opportunities whilst there's mass uncertainty and high volume of opportunity in the market. In the last 12 months, we completed on these deals. This was a build-to-rent scheme that we built. We rent it out. We sold it. We made 43% return on that. We sold that for £470,000 cash. That's now completed. The money's in the bank. We made 43% return on investment on that one. This is a 5,500 square foot build-to-rent high-density residential scheme. It's now fully let, subject to contract, and will be going on the market at 890,000, and we made a 31% return on that site. This is a 6,000 square foot hostel that we bought. We've currently got planning to convert this into 15 high density apartments. We'll then be flipping that on to make a targeted 34% return on investment. This is a care home that we bought for 270,000. We spent about another 250 on it, so we're in for 520. This site is worth about 780 to 800,000. It's currently rented out for over £7,000 a month across 10 high density apartments. Cash flow is ridiculous. And this is a operating business centre that we bought last month. This is 7,500 square foot. We bought it for We'll pay up to £90 a square foot. We bought this off a pension fund for £34 a square foot, and it's already fully tenanted to 11 different businesses operating as a trading business centre. Ladies and gents, without a doubt, hopefully you're getting the message now. 2020 to 25 is the next gold rush. This is the time you want to be moving into the market. Those who make it now make it big. You do not want to be the one that misses the boat. If you miss the boat for the next 5 years, you're going to have to wait another generation for this opportunity to come around. Like I said, the opportunity for us to work together is becoming rapidly diminishing. Our last program has scored 9.9 out of 10. We sold all of the places and we bought more rooms and sold them, and now we're shipping people in for another hotel, and we physically can't fit anybody else in our last event of the year. The 3-day accelerator at the Belfry is completely sold out. There's not even standing room. We've had to give up some of the places that our team are going to attend in order to satisfy the waiting list. We have a waiting list, a cancellations list of people already booking up for next year. But guys, you just do not want to be missing the boat on this. You physically can't get into this event. The room's full. The seats are sold. Every single hotel, if you ring the Belfry now or the Lee Marston now, they will tell you there is not a single bedroom available in either of those hotels for the 3 days of our event, because we've bought every single bedroom in this event. Our next event is next Thursday, Friday, Saturday, and it's a complete sellout. This is the first port of call where you're starting to miss the boat. You've missed the training that's required to make the most of the gold rush. You've missed the opportunity to get the blueprint that you need to apply. But there is an opportunity for you to catch this at the last minute and then potentially join us in October when we open the enrolment in September. Property Entrepreneur is the home of high achievers. We've been breaking world records, creating market leaders, creating award winners for the last 6 years. We've been oversubscribed every year for the last 6 years, and it's exactly the same blueprint that we've used to build our company. The opportunity for you is, although the Property Entrepreneur Accelerator is sold out, so this is our event next weekend, completely sold out, standing room only, you literally can't get in the room or buy any accommodation. What we're trying to do at the moment, so this is the opportunity for you this evening, we can't commit to it, and if we can't do it, we will refund the money you pay this evening. We are trying to arrange for a camera crew to be able to attend it for the event and film the whole 3 days and create a digital DVD pack for the people on our waiting list, the people on our cancellation list, the people who want to make the most of the gold rush, who aren't able to attend the last event of the year. Brexit happens in 5 weeks' time. This is going to get good and get better very, very quickly. Those who miss the boat, those who make it now make it big, and those who miss the boat are going to miss the boat very, very quickly. For the first time ever, we're going to be filming this 3-day event, and there's an opportunity for you tonight to purchase a copy. If we're able to do this, if we're not, we'll refund your money. If we're able to record this DVD, there's an opportunity for you to purchase this DVD pack, and we'll have it sent out to you as immediately as we can after the event, so you can get up to speed, get on board, and then you can join the October program having completed the accelerated training. So the DVD package, so the Gold Rush, don't be the one that missed the boat. This is a once in a lifetime opportunity to ride this wave, the best time in history. Don't be the one that missed the boat. The 3-day training event that's sold out, you can't attend. There's not even standing room. It's £2,997 plus VAT. Because you can't attend this event, but we do want you to attend the 12-month program. If once you've completed the 3-day event, if you're in the position to be able to become a property entrepreneur, we will give you a £2,000 voucher to attend Property Entrepreneur 2020, which is our 12-month program that starts in October. So the value of this training plus the £2,000 voucher, which we'll give you because you're not able to attend the actual event, is £5,000. But you don't need to pay £5,000 for the training event. You don't have to pay £2,000 for the voucher. The home study package is going to be only £997 plus VAT. And in the highly likely event that you sign up to the Property Entrepreneur program, you're not only going to get the training for free, you're also going to get another £1,000 off because you've only paid £1,000 for your £2,000 voucher. Not only that, you can pay in 13-month instalments of only £76 plus VAT. So you can get the UK's leading business and training 3-day program, rated 9.9 out of 10 by our last clients across every question, every delegate on average. Sold out, standing room only, everything you need to capitalize on this next gold rush. Those who make it now make it big. Those who don't are going to miss the bus. For £76 plus VAT, 13 months instalments of that for only £997 plus VAT, you can get the DVD pack of the 3-day training plus a £2,000 voucher off the 12-month program should you decide to join us in October. You can secure your DVD now and your home study package now by going to www.bit.ly/2ZTYTAI. So in case it's case sensitive, www.bit.ly, so bit.ly, all lowercase, /2, capital Z, lowercase ty, capital T, capital A, capital I. And for £76 tonight, and then 12 more instalments of £76 over the next 13 months, you can see every single moment of the 3-day training event that we're hosting at the Belfry next weekend. It's sold out. There's standing room only. We've sold out 2 hotels. It's a £3,000 training program. Plus you get a £2,000 voucher, which you can use to attend the 12-month program starting in October once you've seen the 3-day, should you choose to. At our last 3-day event, every single person, apart from 2 people who couldn't attend for personal reasons, signed up for the 12-month program. Once you've completed the home study package, it is highly likely you will want to make the most of the gold rush. You will want to work with us to help you to do that. You'll then get a further £2,000 off. So you've saved £1,997 on the 3-day training, plus another £2,000 off the 12-month training, and you only have to pay £76 a month for 13 months. Absolute no-brainer. Don't miss the boat. The gold rush is coming. It's economically unquestionable. Now is the best time in history to become a property entrepreneur. Ladies and gentlemen, I very much look forward to working with you over the coming weeks and months as we move into the gold rush. The big end of year event is next Friday, Saturday, Sunday at the Belfry. Those of you that are attending, I very much look forward to seeing you then. Those who didn't, congratulations and best of luck securing your home study pack tonight. And those of you that are watching the recording, best of luck securing your digital home study pack. If you're viewing this after the dates for the accelerator and the offer is still available, then the DVD pack of the digital home study package plus the voucher has been made available. Please secure your purchase now and we'll get that out in the post to you right away. Otherwise, ladies and gents, those who make it now make it big. Success and failure are both very, very predictable. We need high volatility, high volume in the market, and without a doubt, 2020 to 25 is the best time in history to deliver this for us. Success and failure very predictable. I look forward to working with you on Property Entrepreneur in the months and years to come, and look forward to seeing your success and your progress in the months and years ahead. Thank you very much for joining us on this training tonight. Check out all of our videos on YouTube, on the Property Entrepreneur channel. Follow me on Facebook, Daniel Hill, and follow me on Instagram, Property Entrepreneur _ for all the market updates live as they happen to make sure you make the most of 2020 to 25 gold rush. The best time in history to be a property entrepreneur. Thank you very much for joining us, ladies and gents. I wish you the very best of luck and good night.